What if I told you crypto Twitter might be leading you straight into a trap? Hey everyone, welcome back to Debt to DeFi. I'm Mike, and this is my journey from crushing student debt to financial freedom through crypto. Today, we're diving into the real story behind the crypto market in March 2025, comparing the emotional roller coaster on social media with what the technical charts and fundamentals are really telling us. This video is not financial advice. Always do your own research before investing. Now let's unpack the truth behind the headlines. Let's start with the big picture. As of late March 2025, market sentiment is stuck between cautious optimism and underlying fear. On March 18th, the Fear and Greed Index hit 25, deep in fear territory. Just a week later, it's climbed to 47, nearly neutral. Not bullish, not bearish, just waiting. Meanwhile, the total crypto market cap sits around $2.84 trillion, down just 0.25% in the last session. Nothing major. But here's the interesting part. Trading volume exploded, up 25.4% to $81.8 billion. So what's happening? The market's pulling back slightly, but traders are clearly gearing up for big moves. And with Bitcoin dominance at 60.7%, most eyes are still on BTC. Ethereum trails at 8.8%, showing that altcoin season isn't quite here yet. Visual line graph of market cap versus volume plus BTC ETH dominance pie. Now, let's flip over to social media. Twitter has been buzzing. On March 25th, crypto analyst Miles Deutscher tweeted, "You're simply not bullish enough." That one tweet alone fired up thousands of investors. Other influencers, like Altcoin Gordon, are warning that staying on the sidelines could mean missing the boat entirely. And over on YouTube, creators are hyping up projects like Solaxy, SOLX, a new layer 2 for Solana, Bitcoin Bull, BTC Bull, offering BTC-linked rewards, Best Wallet, Best, an all-in-one crypto ecosystem. These tokens are getting a lot of airtime, and with Solaxy raising over $26 million in pre-sale, retail investors are clearly paying attention. But here's the problem. Social media is emotional. It reacts fast. It swings harder than the market itself. And sometimes it just gets it wrong. Now let's ground ourselves in fundamentals, the real drivers behind the market. One big one? The ongoing demand for decentralized finance. People want systems that are secure, transparent, and give them control. Institutional adoption is also heating up. Hedge funds, VC firms, and even governments are now treating crypto like a real asset class. But here's where things get spicy. The macro picture. In April 2025, the Federal Reserve is cutting back quantitative tightening, reducing roll-offs from 25 bolivars to just $5 per month. Historically, this kind of liquidity easing has supercharged crypto bull runs, often with a 10-week delay. So if history repeats, we could see a major rally between late March and mid-May. Visual cue, chart showing QT cuts and BTC lagged responses. Let's talk technicals, starting with Bitcoin. The RSI just broke a 4-month downtrend, flashing a bullish divergence across multiple timeframes. This mirrors the setup we saw before the 2020 bull run. Now for the key levels. Below $87,121. Possible short opportunities down to $84,800. Above $87,121. Potential long plays up to $89,700. So right now, Bitcoin's dancing on the edge. As for Ethereum, it's finally broken above $2,000 after weeks of struggling. Analysts say this could open the door to $20,500, especially with the Pectra upgrade coming soon. Pectra focuses on decentralization and Layer 1 improvements, and that could draw new capital back into the ETH ecosystem. XRP is the wild card. It's up 225% year to date, currently at $2.44, and fueled by speculation of an XRP ETF. But price is running hot, so don't be surprised if we see a short-term pullback. Here's where things get interesting. Let's compare predictions from social media with data-driven analysis. Social media predicts 1. Bitcoin to under 10K in 2 weeks. 2. Ethereum to 2,500 post-upgrade. 3. XRP breaking 3. 4. Solaxy doubles at launch. 5. Meme coins surge by week's end. Sounds exciting, right? But now let's look at the technicals and fundamentals. Realistic market forecasts. 1. Bitcoin consolidates between 84K, 87K before pushing past 90K. 2. Ethereum holds 2K support, targeting $2,200. 3. XRP likely faces resistance at $2.45 and may correct to $2.20. 4. Total market cap could hit 3 trillion by month end. 5. Altcoins may underperform Bitcoin short term. See the contrast? Social media thrives on emotion, hype, and FOMO. Technical and fundamental analysis gives you structure, context, and realistic timelines. Smart investors look at both. Here's the takeaway. Crypto markets are shaped by both narratives and numbers. Social media might catch early momentum, but real growth is built on real data. Whether it's a tweet saying BTC to 110K or a YouTube video pushing the next 100x coin, you've got to cut through the noise. Ask, what's the data say? What's the macro backdrop? And how much risk am I actually taking? That's how you flip the script. That's how you go from debt to DeFi.